India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Okay, I can't say it is finally Friday because tomorrow is working. Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. And it's, of course, the day before the budget, so it is a day before the budget. And I think that'll be the dominant talking point, expectations and all of that. We have got the global stuff to track as well. And I think there are some comments coming in from US President Trump on tariffs, etc., which the markets, at least for now, are taking seriously. I'm Prashant. With me, my colleague Surabhi, and Reema is with us today on the show. Guys, hi, morning.
Hi, morning. So, working Saturday, Sunday we're off?
I don't know.
Just checking. Didn't want to rub that in, but yeah, possibilities.
Too early to say, I would say, right? Depends on what comes in the budget. Reema, I think, is working.
No,
both it is.
I think that'll be for me.
No, but I guess, overnight we've got some interesting headlines as usual, but the market's been in a mood to at least put a floor to the almost endless slide, right? And maybe the bulls will hope that can continue today.
I was wondering, every day President Trump holds a press conference and it goes on for about 1.5 hours. Sometimes he's rambling on. And but it goes every day. So, you got to, there's a lot of speak and maybe there will be action as well. But take it from the beginning. And I'll start with what Trump once again said. And President Trump confirmed that he will implement 25% tariffs on Canada and Mexico on the 1st of February. We should put the confirmed bit in semicolons, but basically you've got, it's a confirmation, but he's confirmed before as well. And he also, by the way, said that he'll implement China tariffs. It's unclear by when, how much, etc. He didn't say very much. Now, his comments could be simply threats, but markets traded them at face value. And why do I say that? You look at currencies, essentially. You look at the dollar first up. And all these comments came towards the end of the US session. The dollar index rose above, the broad dollar that is, rose against most currencies, above 108. And we are holding this morning at about 108.14. But look at the Canadian currency, 1.46. The Mexican currency rallied, the USD Mexican cross basically rallied to about from 20.4 to 20.75. And the CNH is basically once again broken above the 7.28 levels. So that's the broad. And by the way, these levels are holding, largely speaking. So we'll have to kind of see whether there is more to it. By the way, 1st of February, at least in case of Mexico and Canada, is tomorrow. So will we see something over the weekend in terms of those tariffs? I think markets will wait. And if that does happen, I think there perhaps is a little more dollar upside, dollar strength here. But markets will wait for the actual announcement. Now, overnight equities, S&P 0.5%, Nasdaq about 0.25%. Gold made a record high. I think that's the only other. Look at yields unchanged. Dollar I already mentioned. Gold I think is the only one which has made new record highs. But gold also is looking a little overstretched here. So if you're looking to buy, don't chase because there could be a pullback around the corner because just momentum-wise, it looks extremely hot right now. Almost 2,800, but it's been great for gold this year. Apple reported numbers and the stock was up about 2.5%. Actually, iPhone sales were a little poor, but the second quarter forecast, so stock anyway, our post-market was up a little bit. Now, Nifty, just to circle back to the levels here, the Nifty has basically had 3 days of positive close. Yesterday, we hit the 20-day moving average and then basically gave up some gains, but it was still about 0.4% in gains. So the 20 days, the resistance, 23,330 is that level. And then the 40-day exponential moving average comes into focus, which is 23,580 on the upside. On the way down, broadly, you could look at the recent low, or the better thing to do is to just look at this band, 22,900 to 23,000, which should act as a bit of a support zone right here. Now, the Bank Nifty has crossed the 20-day moving average. It closed above it, and it's now inching towards, I should say, to the 50,440 level, which is the 40-day exponential. And beyond that, you look at the daily Bollinger Band. On the upside, that is 50,523. And support comes in at the 40 hourly exponential, which is at 48,922. The GIFT Nifty will indicate what the start is looking like. But remember, it is the budget tomorrow, and no one knows. I mean, there are always expectations. Maybe this time it's a little less than what markets thought, but zero people know what is going to come. So just be mindful of exactly that, because we can all convince ourselves about various things, but we'll know tomorrow. And as I always say, keep expectations low ahead of these kind of events. I mean, if something comes, great. I mean, and you'll be able to trade it, but you don't want to be caught on the opposite side, because that's happened more than once over the last few years now. So 16, 17 points higher on the GIFT Nifty at this point. Surabhi.
Prashant, very philosophical this morning, right? Keep expectations low. That could be said for, almost all things in life, right? The success or the happiness.
I always say that.
Keep expectations low, all right. Applies to the budget as well. But, just a couple of points. By the way, US futures are building on gains. Nasdaq futures are up a little over 0.5% right now because of the positive tech earnings that have come through. If we talk about, this whole issue of tariffs, I picked up some specifics in what Mr. Trump was saying overnight. First of all, the numbers. Now, if you look at the value of trade, and this is data up till November of 2024, so 11 months of data, the value of the US-Canada trade is just under $700 billion, and it's about little lower than $800 billion with Mexico. So this is what's at stake. There are a couple of outlier issues still remaining. For instance, what is he going to do with oil? Will he allow, Canadian oil imports to come in or not? What will he do with lumber? So on this, I just want to pick up the one statement that really sort of caught attention. He says with Canada, that is, on the Canada tariff piece, he says, we don't need the products they have. We have all the oil you need. We have all the trees you need. So that's oil and lumber. On China, he also sort of, again, made some noises. And he goes on to say, I'm also thinking about something because they're sending fentanyl into our country. And because of that, they're causing hundreds and thousands of deaths. So China is going to end up paying a tariff also for that. And we're in the process of doing that. Now, he didn't specify new numbers, but he's been saying 10% to start with, maybe going up to 60% or higher. So let's see, how much of this is just rhetoric and how much he will actually follow through on. But Canada and Mexico seems to be real. There was a little bit of reaction even in the oil markets. First there was a little bit of a spike in oil, but then oil is lower because the larger issues there are going to be resolved with the OPEC meeting, which is the 3rd of February. And remember the US president has been telling OPEC as well that the world in general needs more oil. So basically, you've got some green on the screen once again. In Asia, trade is mixed. Some of the markets are now coming back from the Lunar New Year holiday. For instance, South Korean markets have opened up after 4 days of a gap. But the focus point is all the data that we're getting out of Japan, and it's fairly mixed. CPI continues to inch higher, 2.5% in January versus 2.4% in December. And we know that's why the BOJ has been increasing rates. They did that in the last meeting. The unemployment data is also looking better. Unemployment is at 2.4% versus 2.5% in the previous print. The retail sales data is really, really amazing. 3.7%, 6-month high for Japan retail sales. The Japanese are really going out there shopping. And like I said, some of the other markets are kind of coming back in. So whatever little cues we have, largely positive across Asia. For us this week, it's been a challenging week. The bulls have decided to fight back, but the mid-cap and the small-cap market, that's still hurting. Nifty's up 0.7%. The mid-cap index is down 1%. The small-cap index is still down about 2% for this week. So let's see if we'll see more of this recovery play out today or not. In results, I've only picked out L&T because there's so many and we'll go over the list in our top 10 segment. But L&T is interesting and it's a mixed bag. Now, the big headline was this order inflow number, 1.16 lakh crores. That's the highest ever order inflow and it's surged over 50-odd%. That's great. But the margins issue with L&T is always, the market's issue with L&T always has been margins. And that's where there's a bit of a disappointment because EBITDA and the margin number have missed estimates. So let's see what the approach is going to be. Slightly mixed on, on the numbers. Finally, all eyes on budget. And while Prashant is saying keep expectations low, the market will hear none of it, right? Because, Prashant, I don't know if you've been hearing this or not. I've started to hear a lot of chatter around STT now, saying that since you've hiked capital gains to, 12.5%, and since STT collections have been soaring, last number is about 44,500 crores of STT. Maybe do you want to sort of go a little slow? And the fact that the F&O market rules have also changed because they hiked the STT on F&O in the July budget. But again, I think this is more market hope than anything. And
You know,
Prashant is saying, keep hopes low.
Somebody called me, I think the day before yesterday, said, well, is capital gains being cut? So it's as you go into the budget, there's
Positive.
always, hope, right? It's just human nature. But I think if you're trading and you're putting money on the line, and trading, not investing, trading, I mean, then you've got to be...
Then you can't trade on a hope.
You've got to preserve, first, and then look to make money. So,
That's true.
Absolutely. Rima.
Well, I just wanted to do a complete roundup of the mega tech earnings, considering the heightened selling that we had earlier this week and over the last 2 weeks, perhaps. So first, Microsoft. Microsoft ended with a cut of more than 6%, as despite the heavy investments made in AI in general, their AI, cloud revenue, spending, etc., disappointed the street. Tesla, on the other hand, ended with a gain of nearly 3%. The earnings were a miss, but the company has promised to return to growth in 2025, and particularly the street was enthused by their plans to launch cheaper models, and even they're planning to start autonomous ride-hailing service in the month of June. Meta also gained up close to about 1.5% revenue beat for Meta in the quarter gone by, and Zuckerberg has promised this year to be a really big year. IBM had its best day since 2000 with a rally of nearly about 13%, and Apple, we spoke. The numbers came post-market hours, and currently in after-hour trade, Apple shares are up close to about 3%. And considering the heightened scrutiny around whether AI-related capex and infrastructure spending will continue in light of Deep Through's breakthrough, well, at least the top tech CEOs continue to reaffirm that capex will be intact. So Meta is talking about a $65 billion spend this year in infrastructure, Microsoft $80 billion in building data centers, and Zuckerberg, when he was asked particularly about whether the capex spend will slow related to AI infrastructure, and he said that even if less computer infrastructure is needed for training, based on what we've seen from DeepSeek, he says an increase in AI usage will require basically the current level. This level of investment is what he said. So in a way, reaffirming that capex spend will remain intact. But there's so much to track today. And before that, let's just quickly get to the flows picture, because yesterday, despite the markets closing up with a little bit of a gain, the FI selling was huge. Nearly 4,500 crores sold by the FIs in the cash market. The DIIs bought about 2,100 crore. But one day before the budget, guys, is also the economic survey.
Yes.
And that will be tabled at 12:30. So that's going to be watched. In the US, we've got PCE, back home, core sector, fiscal deficit data will come post-market hours. And talking about micros, Marico and Nestle. These numbers will be released.
Does not feel like a Friday at all. This could be as good as a Monday, actually. Forget Friday. So, given the kind of data flow and the events that are lined up ahead. But let's get started with the equity call of the morning. And we have one that's coming in from Jefferies. Now, what are they saying? Mahesh Nadurkar of Jefferies says the long-awaited market correction is now underway for the last 126 days, making it the second longest of the last 10 corrections that we've seen in a 10-year period. He says at 15%, the current correction is in line with the average corrections. He adds that the Nifty should bottom out before the 7th of February, assuming no tax surprises in the budget and a pro-growth RBI meet. He says rate sensitives should do well in the expected near term. He says that the 12-month outlook depends on FPI flows as strong equity supply offsets domestic flows.